How's it going, everyone? My name is Derek Afasi. I'm the owner of Afasi Financial Group. Today's topic I want to discuss with you inheriting an annuity and give you some little tips on, how to make sure that you're maximizing either your inheritance from an annuity, and then also when you're setting up an annuity to make sure that that your death benefit is getting set up the right way. First and foremost, a very common mistake that individuals make is they do not assign beneficiaries on their annuities. So if you do currently own an annuity, make sure to contact that company and make sure that you have a primary beneficiary, make sure that you have a contingent beneficiary, because reason being is if you do not, then obviously it could go into your estate, go through probate, and then you're going to have a huge mess there. So when you assign a sort of beneficiary on your annuity, already that's going to be a very smooth process. Now let's talk about the fact of, God forbid the person that was an annuitant, the person that was the owner of the policy, they passed away, and now the beneficiary has a sort of inheritance of this annuity. These annuities come out to these individuals in a lump sum, or dependent upon the company, can also come out in a set interval of time, meaning like a 5-year payout or a 10-year payout. If somebody wants to kind of limit how much taxation they're going to be receiving rather than receive that all in a lump sum. So what I always try to recommend is I say, okay, well, first off, anytime that somebody does pass away and you understand that you are the beneficiary, you want to make sure to contact that company and see every single option possible. You have different annuity products out there that they allow you to just receive a lump sum off of something known as an account value. Or if the person had a death benefit annuity, you could receive the death benefit lump sum off of whatever that death benefit account is. Other types of annuity contracts have it where they'll say, okay, well, rather than giving you a lump sum of the account value, we could go and we could splice this up off of whatever this account value is, maybe increase interest by like another 2% and give you a set interval of payments for $100,000. Let's say if there was $100,000 example, and the person wants to take it for 5 years, well, rather than getting paid a set $20,000 every year, the company might say, we'll give you $20,500 every year for the next 5 years. So there's different things that they try to tie an interest to it. My mindset on it, or what I've seen work very favorable in circumstances, is to kind of outweigh your options and to see what would be the best route if you were to take a lump sum option and essentially throw the money in your name and now set up the planning specifically for that lump sum amount. And this is where we come in. We try to help you out in full detail. Is we understand that a lot of people that inherit these things, a lot of people that are dealing with annuities, they might be able to read the generic information online or in generic books. What we try to do is detail a plan specifically, for your situation. If you are trying to set up an annuity and you want to make sure that there's going to be a good inheritance to your beneficiaries, you want to make sure that you're taking that annuity payment out the correct way. What do I mean by that? Well, let's say if you went and you took cash and you rolled it over, you transferred it into an annuity, into something known as a non-qualified annuity. You had this annuity, you kept living. All of a sudden, you decide to trigger off some income. Typically, annuities, and nowadays, annuities, you could take it out in the form of annuitization, which meaning you're surrendering the lump sum of your account value to receive income payments, or you could receive it in the form of an income rider. And annuitization is something I'm very much against. Annuitization simply because you could have worked your entire life, or you could have had this money sitting in a bucket, sitting in essentially a product. So kind of think of this, this money is sitting in a bucket with a little bit of a lid over it. Now you're growing this money, and when it comes time that this money is as large as possible, the insurance company is going to try to make you a tempting offer of saying, hey, listen, Mr. Client, we understand that you have this lump sum bucket. Well, rather than giving you this lump sum bucket, let's go and we'll give you this income stream. We'll create something based upon our mortality tables, our actuarial tables, and we'll give you a set duration of income payments for the rest of your life. And that's how a lot of annuities used to work in the past, and that's why a lot of bad press has happened with annuities. When you have these income riders, what it does is it says, okay, the insurance company is not surrendering that account value. They're not keeping all that money and just giving you a set income payments. With the income rider, you're able to now have the account value and have access to that account value, but now you're triggering the lifetime income that the insurance company is going to have to pay you, income for the rest of your life, meaning that whatever is remaining over in the account value that you did not touch is now going to be left to your beneficiaries. So that's a very generic form of a specific type of annuity that we deal with, but you just want to make sure that you're outweighing all of your options. So, with this video, I want to make sure that you're aware if you're inheriting an annuity and you're very unsure of what exactly happened, you're obviously dealing with the death of a loved one and you're a beneficiary. One of the things to do, give our 1-800 number a call, 1-800-566-1002. Explain to our assistant the situation. Say, hey, listen, I watched the video inheriting an annuity. I want to learn some more information. We'll have a specialist that'll walk you through the process. We'll do a three-way phone call. We'll make sure that you're getting set up properly. We'll outweigh the options for you. Either if you want to have a set duration of interval payments that are coming to you, or if you want to take a lump sum and then you want to also do some planning beyond that, obviously we could help you out. If you are somebody that currently has an annuity and you don't necessarily know whether maybe your major goal was to set up a really good death benefit for that annuity, or you just want to set up an income benefit, but you want to make sure that there's something left over to your beneficiaries, you have to be very specific with that. You have to make sure that you're doing this a correct way. It's not a difficult process, but you just want to make sure that you're not falling victim to how a lot of individuals have unfortunately set up annuities the wrong way. So, that's one of the things that we try to do. We try to make sure that, we're going to be in your corner at all times. Feel free to give our 1-800 number a call. It's 1-800-566-1002. This is just a little bit of information. I hope that you found some value in it. Once again, the name of the company is Afasi Financial Group. The name of our website is retiresharp.com. The YouTube channel is Retire Sharp. We are A+ rated on the Better Business Bureau. We've never had any complaints, and it's because we try to make sure that we're doing planning, that we're setting up methodical process, and we're really working for your benefit at all times. You give us a call 24 hours a day, 7 days a week. And I really hope that you enjoyed this, and I look forward to either speaking with you personally or at least have you deal with my company. Thank you so much.